there is an important moment in history that I think that many are missing right now. And that is that we have serious headwinds right now in unemployment, serious headwinds that we are seeing in national debt, serious headwinds that we're looking at in World War III, union shutdowns, immigration challenges, as we're 40 days or so out from this election, which has been one of the most interesting times in history. I'm very concerned that we're about to experience a hurricane, but we're going to experience it like it was a tornado and we didn't prepare.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. David Stryzewski is with us now. And David, it's always great to have you on the show. So you're extremely concerned now about the prospect of a Category 6 recession crash hitting us now. What makes you think it's imminent?
Well, Kerry, I love how you just framed that and named the Category 6. I know you're in Florida, just dealing with hurricanes there. We were talking kind of in our pre-bit there, had this analogy just kind of come to me, and that was, of course, what's the difference between tornadoes and hurricanes? I mean, they both spin, they both twist, they both destroy. The difference is a tornado shows up out of the blue, was unexpected. You get to the basements because that thing's sirening and the sirens going off in your town. Well, with a hurricane, we see the gale force winds begin. There's some tropical storm out in the middle of wherever, and then something shows up. And I think that what I want to talk about today, and I'm excited to share, is that there is an important moment in history that I think that many are missing right now, and that is that we have serious headwinds right now in unemployment, serious headwinds that we are seeing in national debt, serious headwinds that we're looking at in World War III, union shutdowns, immigration challenges, as we're 40 days or so out from this election, which has been one of the most interesting times in history. I'm very concerned that we're about to experience a hurricane, but we're going to experience it like it was a tornado and we didn't prepare. Because see, even if it's not a Category 5 and everyone's like, hey, we're about to have not a recession. Well, if it's just something less than a 5, but everyone leaves their lawnmowers outside, what ends up happening, those lawnmowers smash through everyone's windows, destroy tons of things, and the catastrophe is far worse than it needed to be because no one was prepared. I think that today we are not prepared as a society. I think today we are not prepared for what is coming economically, and we would rather just, get our favorite person elected and hold out for dear hope, ultimately making situations worse as time goes along. So that's the analogy I think that frames our moment in history right now. And I think it's apropos, just given, what our nation's experiencing on the East Coast here where you live.
Hey, well, I think it's more like you left your doors and your windows open and the storm is coming, and then you just hope it's going to pass you by. But the reality is everybody's going to take a hit here, right?
True. Absolutely. And of course, who takes the biggest hit is the American public, the consumer, the taxpayer, we the people. It's quite remarkable when you look at where we are as a nation and to say that we're strong. The consumer today is sitting with record high credit card debt. And let's just be clear. No one goes into credit card debt because they think that that's a good idea or a good way to buy things. They do it because that was their only answer. That was the only choice. And so, we paid off our credit cards, by the way, in 21 and 22 when everything was locked down. And then because no one wants credit card debt, but now we blew through that 2.9 trillion worth of savings. And we find ourselves in a nation in a place that's very difficult. So with GDP numbers coming out and, we got the rest of the year to be seeing how this thing unfolds. I'm very concerned, Kerry, that we're going to see a lot of this data deteriorate all at one time. And that's probably why the Fed just even cut 50 basis points when I believe that they should have never come close to cutting 50 basis points here in September.
And the odds are good. I knew they were going to cut 50, by the way.
Did you?
Well, yeah, I'm surprised they didn't cut a full 100 basis points, but they had to look like they still care about inflation. But all they care about now is the election.
That's right. Exactly. No, they do care about the election. This is the most political Fed that I can remember. I mean, here they were supposed to cut in July of 23. They wait 14 extra months to cut the month before the election, or the month that everyone starts voting. And so, of course, what's that going to be? That's very inflationary, Kerry. What happens when interest rate sensitive investments like real estate that were already at all-time highs? It's the most unaffordable time in our nation's history to own a home or even rent a home. And so you cut rates, therefore giving us the ability to go deeper into debt, making the price go higher. How is that going to result? The stock market's at all-time highs. This is going to end in the worst crash, and maybe it is a Category 6, like you were saying, and there's not even a Category 6 hurricane, so we'll call it a Category 6 financial crash.
I haven't seen one, but look, Warren Buffett is dumping stocks like there's no tomorrow. What do you make of that, David?
Well, the smartest investor of our time, Warren Buffett, when quoted about asking how to invest in a bull market, he said, when the tide comes in, all ships rise, but it's only when the tide goes out that you find out who's swimming naked, how exposed you actually were. And so all beaches of naked investors out there, right? That's right. And guess what? We got a lot of exposure here today. And what I'm very concerned about is that the anchors to the portfolio that people have been depending on for all these years, they've been saying, hey, I diversify my portfolio because when things that are negative happen, I need a good anchor. And so that's the bond market. Kerry, if I could just say this really quick, I believe that the sucker at the card table, the biggest risk that we have right now is actually in the bond market. And the reason why is that the bond market is not priced according to the risk that we're actually taking. There are 5 different ways that bonds can lose money, and people don't know this. They're not aware of this. Their portfolios lost in 2022 because of this, because the interest rate change component to that. But the United States right now is we've been the cleanest shirt in the dirty laundry, if you will. Like, okay, well, if I got to do something, I guess I'll put that one on. But right now, that shirt is not looking nearly as good because we've got $35 trillion in debt. I mean, we've added 12 trillion in 4 years. I mean, it took us 23 trillion, took us 250 years. We did this in 4, $12 trillion. We added another half to it. This is a runaway freight train right now. If Moody's gets moody and they rate us down from AAA rated to AA rated, could you imagine that being the third rating agency? We just had Fitch do it last year. What would happen with Moody's? The entire system gets downgraded at once. What happens when your positions were credit worthy at BBB and now they go to BB junk status? Ooh, that's an issue. What happens when everything that was A rated becomes potentially less than, or at least questioned? Well, then we've got to look at our system in a different way, and it causes us to examine in a whole new light. That light is not currently here. People are not currently looking at things in that way. And if we begin to evaluate like that, friend, it's going to mean that the world is looking at stocks. They're going to be looking at their investments from a whole different point of view.
Couldn't agree with you more. And look, I think the handwriting's on the wall. $1 trillion of new debt every 100 days.
That's right.
That's $4 trillion a year. And the appetite for U.S. debt is diminishing globally. And the rush to gold is on. So what do you buy here? Gold, silver, Bitcoin? Is that it?
Well, the hard assets, things like that are going to be much more meaningful. So yeah, I'm a big metals investor. I think one of the ways that you can do this is you can purchase the physicals, or you can actually buy the miners. The miners are so on sale right now. I think that as a sector, they're likely going to lead for the next decade. And so, if you don't want to buy individual names, buy an index, a good index, and leverage somebody else's understanding. I think Bitcoin definitely is going to be going up because the U.S. dollar is being questioned. I mean, my belief is that the 10-year Treasury of the United States is at high risk right now of losing the world's reserve asset status. So the fact that everyone puts their money in, 10-year IOUs in the US dollar, is changing with the BRICS nations coming out with their new system, et cetera, et cetera. So, where do we go? Well, hey, there's a number of places to go. But again, we need to examine our anchors. I think now before more than ever, we need hedging strategies. We need to understand how to dial in our risk inside of our portfolios, make sure that we have the right anchors in place before the storm shows up. I mean, if I didn't do the things on the front end, again, I'm going to have a much different outcome as everything gets blown away, pardon the pun, in a more recessionary type of a time frame. So,
hey, I have to tell you, I've been in YouTube jail for years. I mean, I've been in the YouTube gulag of content creators. They've been shuttering me, but recently I've had a number of them blow up for me, go viral, not what they used to. But my last one was Martin Armstrong, Prepare for World War III, gotten over 150,000 views, David.
Wow.
Which means even the YouTube algorithm cannot contain people from seeking out this information. That, to me, could be the biggest contrary indicator. And it's been a trend that's been taking place, David, over the past 6 months, where their algorithm, when I have the right guest on and the right headline, blows up. And people also rip off my stuff and redo it under their own, and they get more views than I do, which is fine because I just want the message to get out there. But, something is definitely afoot. He says gold and Bitcoin. I think you got to have some. You don't need a lot because it could go up tenfold like that. Could be trading 150,000, 250,000 like nothing. Because right now it's close to 63 or 4, down a little bit today. Doesn't particularly matter. But
can I make a quick case for you?
Sure.
The way that I actually like to look at it, I mean, I own some gold, but I'm actually a much bigger silver investor. And here's the reason. We've all been familiar with this idea of the gold standard. Well, the gold standard was 15 ounces of silver is equivalent to the same value as 1 ounce of gold, 15 to 1. Well, this morning we're at like 84 to 1 as is the actual ratio of silver to gold. If you look at the mining ratio, like what are they producing today? It is a like 9 to 1 at night. And so the question is, wow, why is silver not worth more relative to gold? And the answer is because our phones, these wonderful things, computers, it has a commercial value to connect circuits. But the new thing that is being used silver for the most is solar panels. And of course, the quote unquote Inflation Reduction Act gave an incredible incentive, which I took advantage of to get solar. And that is a significant use of silver. So I personally believe that silver has a far larger growth ahead of it than gold does. And so I like silver miners and places that are, able to really capitalize on what will, I think, be a very strong trend. So gold's leading the way to new all-time highs. That also tells us that inflation is with us, because if it takes more US dollars to buy 1 ounce of gold, then that's inflationary. But silver's about to break loose here, and it's going to crash. And I believe that ultimately silver is going to go to, probably $50 at the end of the year, $100 by the end of next year, but it could be as high as 200. It all depends on the progression of that BRICS system, which is, of course, paying 40% of their currency to gold, 60% to the GDP of their nation, which, of course, can be manipulated in the numbers. So let's just focus on 40% of it was gold.
I think BRICS ultimately will be a failure, but for different reasons. But it's still not going to change anything. Do you know how many ounces of silver go into a cruise missile, David?
I do not.
500.
500 ounces. So one monster box worth of, wow. Monster box worth of silver for every cruise missile. Yeah, there you go.
Yeah, we're building more and more of them than ever, which is why the government has been keeping it down for as long as they can. But it's also a lot of military applications, use many, many more ounces of silver than anything else. And, it's just something, that you should keep track of here. All right.
Demand is very high. And that just is to your point. I mean, under COVID, everything shut down. We have a deficit, I think, coming into this year was about 250,000 or 260,000 ounces deficit of what we need. So we weren't replenishing the ones that were used. And of course, in China right now, they're paying an extra $3 over spot beyond what we have to here in the U.S. So I don't think that we've, in the Western world, figured out what they've figured out right now in Asia. And they're doing it as fast as they possibly can. I just wonder, will we experience a hurricane like a tornado? They will. Lack of being observing the times that are changing.
There's no question the entire world, all the fiat there. David, just tell us, how do we connect with you? How do we find you on the web?
Yeah. Hey, fedbubble.com. Got some good information out there. Got classes that are coming up here as the year is ending on Medicare, Social Security, taxes, retirement planning. So that's kind of what we got going on right now. And welcome anybody to get some downloads off our website.
All right. And you'll find a link in the show notes to this interview on financialsurvivalnetwork.com. And just click it, take you to David's site. While you're there, would you please sign up for our free newsletter? Got a question for David, myself, KL@kerrylutz.com is the email address. Always a pleasure to have you on, David. We'll talk to you again real soon.
Kerry, pleasure's mine. Take care. Talk to you soon.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.